Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. It is Thursday. Tomorrow is the last day before Christmas and Hanukkah. Where's Santa Claus? Did Santa Claus get taken over by Donald Trump when he got elected, and did that post-election rally steal from what usually happens, during this seasonal time period? We don't know. All we know is that we've had a tremendous move. We've seen a little bit of momentum leaving. We've seen some upper levels falter but not break. So it all depends on how active do you want to be. We came in today figuring, okay, do we stay above yesterday's lows and probe to the downside, but do we stay above last week's lows and stay in the upper range? And right now we're just like really floating around on low volume, and it's just a matter. But you can lose money on low volume, and you can also make some. So you have to be careful. You don't want to fall asleep behind the wheel with 8, 10, 15 positions just in case we do continue to roll over. Same way you don't want to be caught short here because you think that we've went too far too fast. So you want to make sure you know what's going on. Look right here at the the S&P cash. There's so many times to be very calculated and heavy. This was your pre-election sell-off where we were below the 8-21 day, and then here was your V bottom. And then this is when we took out the descending trend line. Even into this, you didn't have to be heavy. But right here, when we digested above this descending trend line, this was your spot to start accumulating. And then you could have really added once it broke above here. And then you had your move back above prior highs, taking it to 22.14. And then it actually came in and kind of retested it right there. Then here was your next spot. Now the question is, can we stay elevated? Can we stay above the 8-day? We've come into it a few times here and held it, but if we were to break it, no one as an active trader wants to be caught with the move down to the 21-day because you could still be deemed a strong market at the 21-day. Okay, these are just active trends. Guys like us who trade for a living, we use them because we don't like to buy here and suffer down to there. We like to, when we see faulty signals, get out of the way so we could buy here. But it doesn't necessarily always get there. Look what happened last time we went below the the 8-day, we popped right above it and then made new highs and boom. So at this point, we have this upper flag, which is definitely I wouldn't say vulnerable, but has drifted lower. So we'll see what happens tomorrow. Usually they say the Santa Claus rally starts on Friday or the day before Christmas Eve or the day of Christmas Eve, and then starts to go. If that's the case, then maybe this 22.56 holds. We're still above last week's low of 22.48, but it's not like we were having a blistering people waiting to buy, as we went below 22.65 and stayed below. So you got to pick and choose where you want to live. Qs came back down, retested this area. It could stay here for a while. Some people are playing for a breakout failure. Some are playing to accumulate above this resistance. All in all, still above the 8-day. The 21 days playing catch up. It's a little hard to trust. I wouldn't be in all in because I'd rather be in some versus this spot, and then you could add when it gets in motion if heavy volume comes in and high beta tech starts acting well. Or if you think you could be short versus this peak, then don't be short too much. But if it starts breaking this, then maybe add intraday for a move to the 21-day, which is below. So, I would say again, light, whichever way you pick it. At this point, I think it's better to be long than short, but we'll see what happens moving forward. Some of the banks, real quick, same thing. If all you want to do is short these financials, you have to be a surgeon. Still above this upper range, still no breakout, so that's why we have no Dow 20,000. Still hugging the 8-day moving average. Last time it took about 3 weeks before it went again. This has been about 2 weeks. Again, no need to be all in long or all in short, but be a little tactical here, taking some trades and figure out if this holds. This would be your 21-day, and it's all the way down here. And the last thing you want to do is be all in long as a trader for something that's come all this way for it to maybe test the 21-day. Same way, if you're short, who knows if you started shorting here or you were short here. If you were short here, you had to cover when it broke, above the prior high, but you didn't even have that opportunity. It gapped right above it. So anyway, if you're short, maybe you're short versus this little topping tail here. If you're long, be long versus this spot. So two ways to play it. Let's get into some of the things that we had on Redler All Access. I did come in long Amazon, and I stopped myself out just because I'm not sure what's happening here. It's below the 50-day. I thought maybe it would start acting better and reclaim it. It hasn't. I'm going to wait and see. This range is getting tight, and for me, I'd rather not guess. I was kind of guessing it would break to the upside, so for me, I figured it broke below this 765.70, so I figured I'd be tactical. Baba, I broke some rules. I got involved before actually leaving I had to go to that funeral, if you remember. I thought maybe it could start acting a little bit better. Unfortunately, it didn't get stopped out yesterday when I was on the road because it never went back below this prior low. I got stopped out today, and this is below the 21 day and not acting well and trending lower. It's been in a downtrend ever since being rejected on earnings, which we talked about, and it hasn't reclaimed any of these moving averages. So it's in a void, or be very small. This was a very unbelievable trade for us way back when. When it broke above this big base right here, and then we had options into earnings there, and then it gapped up and held, and then even had another nice trade here. But since the peak, it's been rolling down. Here it's above the 8 and 21-day moving average, here below. That's why we have rules. But I did try a little bit earlier this week, and I got stopped out and lost money there. Wasn't much fun. Facebook we've been avoiding. At least it followed the rules. It's been broken. It broke below this pivot. Some guys made some money short. I don't think anyone's sitting here long. Why are we not long? Because, again, below the 50-day moving average, below the 8 and 21-day momentum names, you don't want to be long when that's happening. I don't care what the name is. So today it broke below, so we'll see what's next. Google has been trying to act better, and it's still hanging in there. I would say this is still above the 21-day, trying to build an upper flag type pattern. So see if it holds this. Use that as your stop. It broke above the 50-day, still hanging in there, so see what's next there. Netflix, I got stopped out of it today. Maybe I was a little too tight. I figured I'll be able to buy it back if I have to. This does seem vulnerable. I wouldn't be, it'd be hard to be all in long and all in short here. If it breaks below this, you can get a move lower. If it breaks above that, you can get squeezed. For me, I just used the prior day low and actually 125.50, and I got stopped out, and I'll just wait. Last time I had a clean move was right here and still wasn't that clean. Tesla I didn't do anything with today, but I do like, how this looks and how this is acting. I put a buy on it here when it recrossed the 50-day at like 194.75. I sold some into this move, and now it's hanging out above it. So the longer it hangs out above it, the higher I think it can go. It's something that I'm going to be focusing on next year. I just didn't buy it back today. I probably should have. Just didn't happen the way I wanted it to happen. But I wouldn't be short this. Little topping tail after a big move, and now with a little bit of time it flags, and I think it goes again. Apple was under pressure today. What did it do? In looking at it from here, all it did is hold the 8-day, which is what we pointed out this morning in the morning call. I did not buy it back. Maybe we'll see if we can. If it goes sideways here and holds this, the next move I do think in Apple could be above this descending trend line. It's just might need some time to figure out if it could hold higher. Last time we listed it as a buy when it took back the 50-day here and had a nice move into some congestion. So we'll see what happens there. The new issues were in play. We had a great trade with Twilio. Bought it the day that they had their lockup. It didn't go down, so it went up. Wasn't a big day, but we had some, and then some of you guys added more yesterday, and I took mine on the close. Some of you guys could have sold the open. We talked about selling the open in the morning call. Some of you guys even shorted it. Definitely came in more than anyone would have liked if it was going to be any good moving forward. Right here, if you were playing it for momentum, once it went right back below this prior high here of 34.68, that could have been your stop. It did open. It was actually at 36 this morning, and now this is way too much of a down move for you to be just blindly long it. You had a nice trade here when it didn't go down on the lockup, and then some of you guys had an even better trade here when it took out this 31.49. Was it 36 this morning? So that's it. ACIA tried to go and gave us a quick move and then didn't do much. I still think it needs time. If it would have closed better, maybe it could have been something to hold, but it got rejected. These things are still hard to be trusted. I tried this NTNX. It was a decent trade to start, and then it also didn't have enough juice to get above and stay above this spot. So I'm out of it. This should be your stop here. FCX, I was in it also for a few days, and now. I just figured, to me, it's just not worth it. Got rejected at the moving averages. Here was a bottom tail. Here was a decent ad when it got above this spot, and then got rejected. So I'm just going to wait. I don't love this sector. I loved it, last year at this time for a January effect play, but that was when it was at $6. I was in my report, and that was way down here. So hopefully, you guys are purchasing my report for 2017. Probably the best money you will spend is by buying, because I'm going to give you my 10 to 12 best ideas. Sorry, the rules that I trade by, plus some education. You get so much rolled into one that, it's well worth the price, and you should look into it. If you want to look at my past reports, you can Google them all. They've all been passed around amongst the world, and they've had some pretty significant success. At this point, I am very light. I have some options left over. I've been trying to be in portfolio approach for the past few weeks. I've been holding a lot of stocks, trading a lot of stocks. Today I got stopped out on most. I did take a little spiders just in case, they want to move things higher tomorrow into the weekend to have some headlines so everyone's happy into Christmas, but not too much. I did the spiders just so I could have it under control instead of 5, 6, 7 longs. I'm in Short Hill, so there's no video by me. So this is it between now and Tuesday. We're off Monday. I hope everyone has had a great December and holiday season, a great 2016. There's been so many tradable moves, and we've gone over them so many times in webinars and in the morning call, the recap, my note. Your resources are there for you to use. At this point, don't try and make up your entire year in the next 5 sessions and say, oh, I thought Santa was coming. No. Get yourself together, get your head squared away, so this way you could start 2017 on the right foot. Get your resources in check, get your 6 monitor setup or 4 or 2 together, feed the brain over the holidays, spend time with the family, so this way you're ready to roll. Write a list of the 10 things you've done well, the 20 things you did wrong, and build on your success, work on your failures, and keep making progress. You can make money in the stock market. It doesn't matter how many computers there are, it doesn't matter how many, prop traders are out of the business. You still have stocks that go from 100 to 150, and you could figure out the process to get there the same way they go from 150 back to 120, and that's your job, to feel out the movement, to figure out how you could participate in a system that caters to your risk, your size, your discipline, and your process. And that's all I have to say. I have to be on a 4:45 ferry. I wish you the best. Have an unbelievable holiday. I'll be on Twitter tomorrow to interact and go over some tactical things. We can make some cash flow, so we could put a little bit more Hanukkah gelt underneath the menorah, or some little gifts in your stocking. Have a great one. I will see you soon.